All right, so today we want to just kind of go over the basics of what is a mortgage, something that will be really helpful for you when you're going to purchase a home, but just to understand a couple of little nuances with it. And then again, some things to look out for, during and after the process. So, first off, what is a mortgage? A mortgage, we want to think about it as a contract between you and the lender, or maybe it's a bank. And basically, it tells you exactly what you're going to be purchasing that property for. Now, the note is different from a mortgage. The note, basically, we want to think about it as it's kind of like a term sheet for the mortgage that lets us know exactly what we're going to be paying on that mortgage. It'll let us know interest rate, payment period, date it's taking place, who the parties are involved with, and all those different types of things. Now, one or really two things that are very important to kind of keep in mind with that note is the note will let you know if there's any prepayment penalties. Now, prepayment penalties just means if you were to refi or you were to sell the property, would there be any penalties for you to do so? Most residential mortgages, in fact, almost all of them have the ability to make prepayments where you can either make large chunks or, in fact, pay the whole thing off and not be charged any cost to doing so versus investment properties and sometimes commercial properties aren't regulated by the same entities, so sometimes they're able to charge based on certain points of time. So it's especially relevant in this market right now because of the higher interest rates. A lot of people want to know, okay, if I get into this, can I refi? Can there be different things that I do in terms of paying the balance down, all those types of things. Now, one other thing in terms of, looking at your responsibilities, if, you get in a jam and you can't pay that mortgage, if you can't sell the property, sometimes the loans will be assumable. And what that just means is that you can transfer it to another entity without actually having a sale of the property. So basically, someone else can assume that note. That means they're assuming that obligation. Now, again, this will be outlined in those terms, whether it's assumable or not. Now, one thing to keep in mind too is whoever you close the loan with, if it's a broker, lender, or bank, doesn't always mean that's going to be the entity you finish the loan with. In fact, a lot of brokers end up selling loans right after the closing of the loan. So you may not even have the same lender on the first payment you make. Now, they are required to inform you in writing of the change in servicer, so you can reach out and make sure it's authentic, all those different types of things, or work with the person that you originally brokered the deal or lender to let them know who your servicer will be. So the servicer is responsible for basically handling the monthly payments, handling everything in terms of, if you did want to make a large prepayment, where let's say you wanted to pay a large amount to get the principal down. So that's something that's really important to keep aware of if you do want to, assume. The other thing is recasting. Recasting, again, can be allowed or not depending on the institution. It's where you make a large chunk and then it re-amortizes the payment. So again, we'll do a separate video on that, but those are some of the nuances you want to be aware of when it comes to the mortgage and really understanding what it is.